Welcome to Friday's Market Wrap-Up. Matthew Buckley, the Chief Investment Strategist here at Wealth Creation Investing. And what a wild week it's been, folks, and it's going to be a wild Friday as well. Just a quick debrief of the week. We've seen a really big round trip, and we might see another round trip to the downside here today. Monday, Comedy Central blamed Monday's market implosion on an Italian playboy and comedian trying to run Italy together. Obviously, the market didn't implode over that. A lot of profit-taking, institutional selling, getting ready for a potential impact of the sequester. Then we had the Ben Bernanke speech on Tuesday, Wednesday, in front of the House and the Senate, and he didn't say anything we already didn't know. So the market rallied. Market also rallied on very strong economic news. We had some good retail earnings throughout the week, excellent housing numbers throughout the week as well, and consumer confidence numbers. Kind of a flat Thursday, and now we're going to implode on Friday. Why? We had the biggest drop. You ready? Look at this number. This should scare the hell out of the president, but he really doesn't care. Personal income. The biggest drop in personal income in 20 years. Okay? The biggest consumer drop in income in 20 years. And then look at this. The savings rate has dropped to 2007 rate. This is terrifying, folks. This is not good. The futures are already indicating a pretty bad open to the downside. But Mr. President, wake up. Okay? If the media calls the previous stuff the Bush tax cuts, you're going to be stuck with the Obama tax increases. I'm going to stick you with those because as a result of your tax increases, the consumer is hurting. Now you're talking about getting people back to work, which of course you don't mean, and you talk about all sorts of other great stuff. Well, we do have to cut spending. You spent the past week and a half gallivanting around the United States trying to scare people about the sequester. Folks, do the math. $85 billion is what the sequester is looking like. The Federal Reserve, the Ben Bernanke, is printing $85 billion a month to buy mortgage-backed securities and treasuries. So this whole sequester, the president, airliners are going to fall out of the sky, the TSA, the air traffic controllers, meat inspectors, oh my God, mass hysteria. Knock it off, sir. Why don't you do your job and lead? We haven't had a budget in 4 years, Mr. President. Why? Because your Democratic Senate Majority Leader, Harry Reid, hasn't brought a budget to the floor for a vote. You might operate your household or your government without a budget, sir. I don't operate my business. I don't operate my household without a budget. Time to start leading, okay? And we are seeing the impact of his policies on the economy. People lie, numbers don't, folks. Personal spending, personal income. Personal spending came in flat. Personal income absolutely destroyed. Actually seeing some manufacturing PMI coming in weaker as well. The University of Michigan consumer sentiment at about 10 a.m. is going to be ginormous, especially based on this personal income number. But this really, it cracks me up. Personal savings rate just absolutely imploded. Well, guess what, Einstein in the White House? People can't save what they don't have, right? So very bad news today. So what's that mean? What's this have to do with everything? Well, you can see we pretty much, opened pretty high on Monday, imploded, got most of it back. Tuesday, Wednesday, flat Thursday. We're going to have a down Friday. This is characteristic of what we're going to be seeing in this economy until the cows come home. Okay, about 3 weeks from now, we're going to have a huge fight over what? The budget. The continuing resolution. Our government's operated under a continuing resolution for the past 3-4 years. And now the Republicans are finally growing up and saying, give us a budget. Time to really wake up and get our fiscal house in order. So it's going to get ugly, guys. It's going to be very interesting. During this incredible week, this round-trip week that we've seen, our weekly options model portfolio, check this out. Look how we've done in an absolute crazy week. On about $15,000 of risk, we've returned over 30%. And barring a major implosion today, we're going to return nearly 50% in 1 week. 50% return on risk. We're looking at nearly $7,000, over $7,000 in gains today if everything kind of stays right down the fairway. Folks, that's just discipline. That's risk management. That's superior execution. How are we doing month to date in our weekly options model portfolio? We're up this will be over nearly $16,000 in profit in 1 month. And that's, like I said, only risking maximum $15,000 per week. That's pretty cool, folks. So if you want to see how we're doing that, you can go over to topgunoptions.com/weekly options and take a free test trial, guys. We have literally hundreds of traders who have joined this newest service, and the testimonials keep rolling. We had a great trading session the other day. I'll leave it at that. I'm not a big testimonial guy. Let's just say that a lot of people are pretty happy with nearly $16,000 in gains in about four weeks in February alone, in a time when this market's been absolutely crazy, when the VIX has made a round trip from 12 all the way up to about 18. What did we see? No, I think we're just shy of. No, yeah, we did. We saw a 19 print. So yeah, I mean, look at this, folks. In a week when we saw the VIX go up, 30, 40%, about 30%. Look at this. We're having a blast in the weekly options model portfolio. If your neck hurts during a week like this, you're doing it wrong. You're just not. You're not trading right. You don't have a strategic mindset of what's going on in the market and why you need to relax and know what's going to happen. I think the market pulls back a little bit today since we have seen kind of a roughshod week. I don't think it implodes. I think we're down, and we end the week down. Might have a little rally into the close. But the next couple weeks, like I said, are going to be characterized by budget fight, press conferences, and teeth gnashing. So get ready for another increase in volatility. Get ready for a little pullback in the market. I don't think it's going to be the big one. I don't think it's going to be the Sanford & Son massive heart attack. I think that's going to come with Q1 earnings. I think Q1 earnings, especially looking at the consumer, personal income, personal spending, and the savings rate, I think companies are really going to take it on the chin the first quarter, and that's going to be the 5 to 10% sell-off. So if you want to see how I'm going to trade that, get on board one of our trading services, either at Wealth Creation Investing or over at Top Gun Options. Okay, got to go. Got to get ready for the open and make some money. Happy hunting. Make sure you hedge, and I'll see you with Monday's Market Outlook.